How's it going, everybody? This is BeatTheBush. Today I'm going to talk about a few stocks including Gilead, USO, and also gold. This video is sponsored by Webull. If you want to help support this channel, check out my referral link down in the video description below. Webull is a free trading app, and if you sign up for it, you get one free stock. If you deposit more than $100, you get another free stock. Gilead stock tumbles after stat report on weak data in remdesivir trial in China. Now, if you've been following Gilead, there's a lot of biotech companies out there trying to make some sort of therapeutic, some sort of vaccine, and if any of these companies prove that, oh, theirs work a little bit better than others, maybe they have some trial or something, and if they have some minute piece of data, all of a sudden their stock jumps up. Now, right now there's a handful of these companies, like 50 to 70 of them, that are trying to do the same thing, and Gilead is one of these companies. My take on investing on one of these companies that are promising to have some sort of therapeutic or some sort of vaccine is that this is generally a shot in the dark, right? You just don't know which company is going to create this solution that would bring us all out of this really, really terrible lockdown. If you look at their stock price, they have some promise over here. They've been increasing steadily over the past month or so. They started off in the beginning of February around 65, and right now they're ending up about 77. Even though they have some preliminary reports from Stat saying that, oh, their trials didn't work so well. And then anytime you have these news reports, sometimes the study could be flawed or something. Someone's gonna go back and look at the data and then go, hey, you didn't do the study properly. The thing you have to be very careful with any single study is they could administer this drug and there could be an alternate thing that causes people to not die as high a rate as before. The best way to prove that these drugs work is that you have to try it many times and prove that they definitely heal from it. That's all I'm gonna say about these drug companies. Personally, I'm not invested in any of these. Remdesivir is like some sort of anti-malaria drug, so they had this laying around already. So they decided to give it to the current patients that's having these infections. So if you are not in this space, it's probably best to avoid it rather than just go, oh, let me close my eyes and pick a company, and then you saw on the news somewhere and you think that maybe they have some drug that could potentially do well. This is a shot in the dark because there's a lot of different drugs that could happen to work in the end. And there's gonna be a lot of drugs that could in the end also not work. So this is kind of like a gamble because you really don't know which company is gonna come out with the drug that works. Now let me move on to crude oil futures dipping to below zero. If you look at the Wall Street Journal, it is somewhat misleading. It says US oil costs less than zero after a sharp Monday sell-off. Now, when it says US oil, it doesn't mean like you're gonna go to the gas pump and it says $0 and you can fill up for free. Nor does it mean that the producers can actually buy oil for free right now. This is actually US oil futures. Futures is a contract where if you buy into it, you can either trade it later for some other amount. This is a speculative amount. Or you can hold this contract until expiration and take delivery of that. So the contract in question is over here. Crude oil WTI May expiration for 2020. You can see on the chart over here, it dipped way below zero, minus 37, minus $40 per barrel over here. Now, what does this mean? It just means that people trading this commodity think that all the space for holding the oil is gonna be filled up and the oil essentially becomes a burden because if someone hands you a barrel of oil and you have nowhere to store it, it's essentially worth less than zero to you. So this is what it means for the people that are trading the oil right now. If they hold on to this contract and they end up somehow with this oil, they have to get rid of it somehow. But in reality, if you wait until this contract actually expires, it's most likely gonna come up above zero because people are gonna have to pay money to physically take possession of this oil. You're not gonna have someone have a barrel of oil. They're gonna give you money to take it away from them. You can't actually buy oil for minus dollars over here. And also, I personally have not traded commodities before, but if this is something you want to do, you actually have to get a special brokerage account that is specially meant for trading commodities. Most brokerages know that you're only buying this as a speculation and you don't really actually want to hold the oil. Like right here, I'm not going to put a barrel of oil over here, especially if I'm going to buy like 1,000 of them, right? So there's no way I'm going to take possession of this, and a broker will know this, and then they're going to essentially buy these contracts back from you. So nothing physical happened. Of course, some of these contracts, when you buy it, there's a contract underneath that says you can either take delivery of the actual underlying product or you can trade it for value. Most of the time, what you're going to end up doing is before it expires, it's going to be valued at something. The brokerage will end up buying it from you, and then somehow it'll end up in the hands of someone that actually do want to buy these commodities until at the end, someone actually takes delivery of the actual product. Now, if you look at Robinhood or SoFi, by the way, if you guys are interested in any of these accounts, I do have referrals down in the video description below. But these apps actually report some of the most popular traded ticker symbols. And over the past week, USO happens to be a hotly traded ticker symbol. So a lot of people are trading this because the ticker symbol is USO, and if you look at the Wall Street Journal article, it says US oil, right? Does US oil mean you're gonna trade the USO ticker symbol? It turns out US oil really actually meant US oil futures, and US oil fund LP is a separate ETF fund. This is the description of it over here. The most important thing here is USO gets exposure to oil using derivatives like all oil ETPs. The fund predominantly holds front-month futures contracts on WTI, rolling into the next contract every month, similar to our segment benchmark. This method is particularly sensitive to short-term changes in spot prices, which makes USO a great vehicle for riding short-term moves in crude prices. Underline short term here, because you can just easily read this paragraph and go, oh, short term, great, okay? But after this, it says, but long-term holders may want to look at other options. And I have to stress this out so much because all these people on Robinhood, on SoFi, they're buying USO, thinking that it's gonna go up. Yeah, it might have went up mainly only due to speculation because of everybody else piling on into this stock. Just look at USO over here. Year to date, it was at $12 or so. And it has been trickling down and down and down until about $2.56 right now. This is like 80% loss. And you might wonder, wow, you know, if you held it since maybe March, you had a nice 50–60% loss already. So why am I stressing this short-term versus long-term thing? Because I personally made a mistake trading in some sort of exchange traded fund that is meant for short term. I initially just kind of brushed it off as saying, okay, you know, it's just like any other fund, you know, you can just buy. If it happens to go down, then you can just hold it for a week or two and then, you know, maybe it'll pop back up. But the thing is, these funds, they're actually designed to keep on going down. So if you hold it for a really long time, you're almost guaranteed that it's always going to lose money. So check out USO for the max duration over a 14-year period. It started off its life at around $70. Now it's $2.64. So if you just kind of eyeball this graph, it's trending downwards. It's not trending upwards like Berkshire or whatnot. It's always gonna go down. If you hold on to it, you're almost guaranteed going to lose money. Now, where did I learn this valuable lesson from is when I bought TVIX, which is a volatility stock. You are an investor. Maybe you have a free trading app like Webull, Robinhood, SoFi, whatever. And you have this bright idea. Oh, I'm gonna trade in US oil. Oh, I'm gonna trade in volatility. Oh, I'm gonna trade in gold or whatnot. The thing is, sometimes these funds, they are designed to lose money. Whoever designed these funds, if you put money into it, they're actually siphoning money off of this to pay for whatever expenses. But if you look at the long-term stock performance of some of these funds that are meant for short-term trading, you can see that it just kind of trickles down and down and down. And this is exemplified in TVIX. If you look at TVIX over the 1-year period, it has been trickling down all the way up until this infection scare of 2020 March, and then all of a sudden it spiked all the way up to 700. So yes, if you happen to hold on to it right around February and you held on to it all the way up, you might have had a chance to make a lot of money, maybe 5 to 7-fold in a short period of about a month or so. But who would have guessed that volatility is going to increase so much? But I want to really stress the point that this fund, this TVIX, is a short-term fund. You really don't want to hold on to this for more than a few weeks. So over here, check out the 5-year graph of TVIX. It started its life around $300,000. And right now it's $267. So let's say long time ago, you bought this stock thinking that you're gonna hold on to it until 2020 of March because you know that it's gonna spike. You still would have lost money. You can see in this chart that it just kept on going down and down. It went down so much that you can't even see. It's like basically flatlined over there. But as a short-term trade, yeah, once in a while, it pops up a lot and then you can make money. So this fund, some sort of exchange traded investment vehicle thing, you have to be super careful. Same thing with this USO thing. If you hold on to this USO thing long term, you're guaranteed to lose money. So how would I treat trading in USO or TVIX? These stocks don't allow me to hold on to them long term because personally, I cannot predict the future too well. And I'm sure a lot of people could not have predicted the future of USO popping back up a little bit. This is just a basic gamble. And if you happen to make money, good for you. And I think you essentially need to treat these funds, these short-term funds, kind of like a hot coal with gloves on. Once you hold on to it, if you hold on to it for too long, it's gonna burn through your gloves and it's gonna burn you. You just kind of like, oh, okay, I'm gonna touch it for like a day or two, and then you toss it back out to someone else. And if you happen to lose money, you have to know that even if you lose money, you have to sell it out. Because if you just try to keep it longer and longer, thinking that it's gonna, somehow make up for it by popping back up maybe a week later, in 99.5% of the cases, you're gonna lose more money anyhow. When I invest in other kind of assets where it's an actual company that is gonna appreciate over the long period, is that if I happen to lose money short term, I still have a card up my sleeve where I can go, haha, I can wait this out. I can wait a year. I can wait 2 years. They can start paying me dividends and stuff, and I can just wait for this to come in. I can wait for the stock to come back up. But these funds, you cannot do this. You cannot just wait it out because it's going to lose your money. Now, let me go back to how this short-term oil drop to below zero actually affected my IXC holdings. A lot of people watching my videos thinking that I invested in oil, when in fact I actually invested in an ETF fund that buys a lot of different companies, and this particular stock, it keeps its asset value over time. Currently, of course, is not doing very well. It dropped from, let's say, $30 from beginning of this year to a low of $15, and right now it's hovering around $18.40. And like I said before, my buy-in price is around $20.20. Overall, I'm down about 9%, and no, I have not lost my pants because some people thought that with oil going to zero or going to below zero, I probably lost my entire principal, which is not true. I still have like 91% of my initial principal, and these are in companies, right? These are in oil companies, Exxon, BP, Shell, all this stuff, right? And these companies have inherent value to them. They also invested in other energy sources, right? It's not just oil, although it's mainly oil. Futures contracts is a bit more volatile, and I equate it to kind of like currency trading. It's like multiple times more volatile than if you buy a stock. And a stock itself, it's pretty darn volatile already, right? It's like plus minus 30%. And then if you look at this futures contract, it went down 80%. So it definitely has a lot more volatility in it than actual stocks. Now let me move on to look at gold. I'm not gonna talk too much about gold, but let's just take a look at the chart over here. This is a fund for buying gold. You're not actually gonna get any gold in the mail or anything after you buy this fund. It's just a fund that invests in gold, so you can actually invest in it without having to actually hold on to the gold itself. Because if you buy the physical gold, you have to worry about storage, right? You gotta put it in a security deposit box, or maybe you gotta put it in a safe, maybe you gotta dig a hole or something. So when you buy this fund, gold is, how much is it right now? Like 1,700. And this gold trust, GLD, trades at $163. And I remember the beginning of this year is around 145 or so. So it's come up a little bit. With the Federal Reserve pumping money into the system, right? They just spent $2 trillion of stimulus money. This essentially devalues your dollar. And the US debt is sitting at $24 trillion with a GDP of $20 trillion. Sometimes you have to be careful with investing in gold. Just because they pump money into the system does not necessarily mean gold is gonna go in lockstep with how much money they pump in. Sometimes there's a lag to this. Once they pump money in, it needs to have this trickling effect where your US dollars gets diluted a bit. And a strong dollar keeps the gold prices low. So just because you have more money in the system, you can still have a strong dollar because the US dollar is like a worldwide currency still. There are a lot of different aspects to the strength of the dollar, and I'm not gonna go into this. Just know that GLD is just something I personally have invested in before, just as a kind of like a proxy to investing in actual gold. So you don't have to take delivery of actual gold in your hands, because this is a security concern, right? Holding on to like a big bar of gold. Again, all these stocks I talk about are for informational purposes only. Stock values can go up and down. Thanks for watching this video. Don't forget to give me a like. If you guys are interested in supporting this channel, check out my Webull referral link down in the video description below. Don't forget to give me a comment down below. Let me know what you guys think of all these stocks I talk about. And as always, don't forget to push that subscribe button and ring that bell icon. Thanks for watching.